Good morning. Welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts. Let's talk about major markets today, starting with the S&P, of course. Yesterday, news headlines. Markets hits all-time highs. Yes, it did, and really hasn't done a whole lot. It's been just one of these situations where, again, we continue to have a very flat top here. Markets rallied up to this off the 50-day moving average, have really done nothing now for the last couple of weeks, just really kind of consolidating their gains here, despite the fact we've had record earnings for companies. It's been good economic news, passing infrastructure bills, etc., not really getting a lot of traction here. And in that process, money flows into the market are really deteriorating rapidly here. This suggests that we're getting much closer now to a correctional period in the markets. That would start with a retest of the 50-day moving average. A break of that 50-day sets up about a 12% decline down to the 200-day moving average. That well within the context. In fact, if you go by our website, realinvestmentadvice.com, our Technically Speaking post this week is talking about a potential test of the 200-day moving average by the end of this year. So again, just well within the context of time and duration, that's very likely to occur. Pay attention. Also, our money flow indicator is also getting very elevated here, very close to signaling a sell signal, which we've gotten previously before. So again, kind of timing of everything starting to line up here just a bit for at least a short-term correction, again, starting at the 50-day moving average. If we can hold there, great. If not, we're going to have a little bit deeper correction through the month of September. Something to pay attention to. Let's jump over to some other markets as well. Despite a recent rally here in emerging markets, which has picked up a little bit of traction here just recently, still not a lot going on here. The decline overall continues here. Emerging markets continue to really underperform. A big part of that is because of the uptrend that we keep watching in the dollar. The dollar recently hitting 5-month highs here. Again, nice rising trend of the U.S. dollar here. Stronger U.S. dollar impacts emerging markets and international as well. And of course, that also attracts inflows. And part of this rally in the dollar is inflows into the U.S. Treasury, which has had a very decent run here, correcting here just recently a bit after a very strong run in TLT. As an example, this is an opportunity where we're starting to see a formation of rising bottoms, starting to see an increase in the strength as yields start to go back towards the lower end of the range, around 1%. This corresponds, of course, with the idea of weaker economic growth as we go forward. But again, as more money goes into the U.S. dollars, it goes into U.S. dollars in the form of buying treasuries. So again, not surprising here that we've been seeing stronger bond prices relative and tracking to stronger U.S. dollars. Let's jump over to small cap, mid cap here, see what's going on. Small caps here just recently have been picking up a little bit of traction here. Again, really underperforming since the beginning of this year. Small caps tend to do well after an initial crash in the markets, what we saw last March. That rally really now starting to migrate back over into large cap names. Why? Money is hiding in highly liquid names like S&P and NASDAQ stocks, Apple, Facebook, Google, Microsoft, Amazon. Those big cap, mega cap names are highly liquid, very easy to hide in for institutions to manage risk in portfolios. That leads to an underperformance in small cap stocks, which are more susceptible to weaker economic growth as you go forward. Mid caps look exactly like small caps as well, have a nice rally here over the last couple of weeks, but again, despite that rally, not really breaking out of this long-term consolidation, recently triggering a sell signal again. Pressure on the downside. If we begin to see the S&P 500 correct, we're going to see bigger corrections in small cap and mid cap stocks. So again, watch your risk there. This is a good time to try to shift away, more domestically focused, more large cap base in your portfolio. That'll help protect you during an initial downturn in the markets and then give you an opportunity to rebalance risk in your portfolio accordingly. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.